Hey, it's Michael Saul, but everyone calls me Tiny, so you can too. And in this video, I want to talk about trading into earnings. Now, what I mean by into earnings, I mean, let's say a company is reporting Monday night or Tuesday morning. What I mean by trading into the earnings is taking a position Monday at the close so you can potentially take advantage of the move up or down after the report is released Monday night or Tuesday before the market opens. Right? That's what I mean by into earnings, or even a day or two ahead of earnings. All right. And last week in the Inner Circle membership video, I talked to the members about this stock. Now, I have the name blurred out, but I'm going to show it to you. The reason I blurred it out is I don't want you leaving this video to go look up this chart. But like I said, I'm going to give it to you in a couple of seconds. Anyway, so this is exactly what I wrote. I said, reports this week with a big exclamation point. Nice pattern, though. And I explained that even though it has a really nice pattern, because it had earnings, and this was last week, like I said, I wasn't risking trying to take this trade or talk about this trade in the video. So let's break down this pattern and let's see if it's really as nice as I said it was. All right, well, first of all, you can see here after the low in January down near the 42 area, it rallied up to 58. So pretty nice move. Okay, 16 points. What's that about? I don't know, a little less than 40%, whatever it was. And then it pulled back, and then it broke resistance, and is now, and not now, but went into a sideways consolidation. So yeah, this is pretty bullish. It's above the moving averages. The moving averages are in proper order. It's a nice consolidation. So this would be a trade that if it didn't have earnings coming up, I would be watching for further upside. So let's see how it turned out. So Monday, nice narrow range day, still okay, still looks okay. Tuesday, a little dip, but then a nice recovery. This looks like it's going to break. Then Wednesday, whoops, okay, went down, but held the pattern a bit, right? Poked out a little bit, but got a small bounce back into the pattern. Oh, and then look at Thursday. Wow, it broke down, but it came back. So, wow, it's still inside the pattern. So maybe, hey, this was a fake out, and it's going to move higher. There's your earnings, and then boom, Friday. All right, now, we're in earnings season right now. I'm recording this July 31st, so there were a lot of stocks that reported. And, this is just one example, and the name of the stock is Vantiv, symbol is VNTV. So let's look at a couple of other stocks and see if maybe the patterns did a little better on those. So we'll start with some of the big names like Amazon. So going into earnings, Amazon had a bullish pattern, and yeah, okay, the pattern was quote-unquote right. And I'm putting it quote-unquote because it's ahead of earnings. I'm a technical analyst. I've been one for 20 years, but I am not one of these technical analysts, chart readers that go around and say, the chart discounts everything. The chart's all that matters. I used to be like that. It was a very short time I was like that. But then I realized that, there are a lot of other factors that have to go into your selection of trades. It's not just the chart. Okay, there could be beautiful patterns that get destroyed based on news or earnings or whatever the reason is. All right, so here's Amazon. So Amazon looks like it did okay off of its pattern. Google's another one that did okay. It was in a bullish consolidation. Even though overall it was a range, it had a nice bounce off the June lows. It started to go higher, and then Friday with the big pop there. All right, Facebook has been pretty strong for a while. Had a nice consolidation. It popped up, and then of course it gapped up with the earnings. It tends to do that. It tends to gap up after earnings and then sell. But of course, that's what it's been doing so far. That can change. That's a pattern that's good until it stops working. All right, so that's with Facebook. How about Buffalo Wild Wings? So Buffalo Wild Wings, you do have the higher low here, and you did have this nice little pop here, but it was under a downtrending 200-day moving average. Tough to call this setup bullish. I mean, sure, if you look afterwards, you could see, but tough to call this bullish. I would call it more neutral, but hey, it had a nice bullish reaction. There's Buffalo Wild Wings. And what about Ashland. Ashland. So if we look, we see Ashland, again, pretty nice bullish pattern here. Okay, broke out of a base and consolidated. This is the first consolidation after a base breakout. Usually high probability for upside, but instead, boom, got cracked. All right, so that's another example. Now we looked at the Vantiv, and then we looked at Ashland. And what about Apple? Okay, now Apple, you could say, wow, Apple had a really nice bullish reaction to earnings, but I don't care what you say. I'll argue this with you as much as you want. This was not a bullish setup heading into earnings. It wasn't. Okay? Oh, well, it's a higher low. Right, but it's below the 50 and the 200-day moving average. It's correcting after an impulse down. This was not in any way a bullish setup. As a matter of fact, if I had to pick, I would say this was a bearish setup. And instead, boom, it gaps up. Now, of course, it's consolidating on the 200-day moving average. So what's the point of this video? The point of this video is a lot of people will say, oh, you're trading? Oh, you're just gambling. No. Okay, you're speculating. And there are criteria that you can follow, a framework you can follow that makes your trades better than a 50-50 chance of success. I get it. Nobody knows the future. I get it. I understand that. Nobody knows where price is going to go. Okay, but based on what has happened in the past and based on reading charts, however you want to do it, with following momentum, using patterns, all a chart does is reflect what the market participants are doing. All right, so there are ways to get the odds better than 50-50. I have not come across anything that's 100%. Besides, despite, what these idiot super gurus claim that they never lose, or they're 89.7% correct. All right, whatever. All right, there's no such thing as perfect. But it's not gambling, in my opinion. It's speculation, and the only way you have a chance of making serious returns is by taking risk. Okay, but again, that's another story for another video. All right, but trying to guess what a stock is going to do after earnings is purely gambling. It's a pure flip of the coin. A stock can beat and go down. A stock can miss and go up based on guidance, based not on guidance, based on units sold, based on better than expected this. Oh, they missed earnings, but they sold more of this widget or this doodad or whatever it is. There's a lot of things that can go into it. All right, option traders for years and years and years get destroyed trying to guess what is going to happen after earnings. Well, this looks like a bearish pattern, so we're going down. Let's buy puts. Whoops. Let's sell calls. Whoops. Oh, this is bullish. We're going up. Oh, look at this. We're going, oh, wow. Oh, they beat. Why are they going down? Whoops, there goes my option premium out the window. How about when the stock doesn't move what you expect it to move? All right, so enough of the negativity. Let's look at the positive side of this. How do you potentially take advantage of earnings? And I'm going to also show you two stocks that have earnings coming up in beautiful patterns, by the way. All right, so the first way that you could take advantage is by looking for setups ahead of earnings, not just a day or two ahead, but a few weeks out. A lot of times, and the super guru will try to charge you hundreds of dollars for this information, but I'm going to give it to you for free. A lot of times there will be something called an earnings run, where a stock will move higher into earnings. It's not a guarantee, as the idiot super guru will try to tell you, oh, it always happens. No, it doesn't always happen. But there are times where you can look at some stocks that are setting up in some nice bullish patterns, and they can get a run into earnings, a move higher into earnings. That's one way. The second way is to wait for earnings to get out of the way and then look for the pattern to set up. In this case, let's look at Apple. Nice pop into the 200-day moving average. It sold off after the gap up, but then the next day, which was Thursday, it had the nice day, got it all back, and then the doji on Friday. Now, I don't know if 3 days is enough for a consolidation. Maybe it's going to take a little longer, whatever it is. But Apple is at the 200-day moving average here. And as we can see, it doesn't stay there very long. Okay, and I'm going to give you a little piece of news here. Most stocks do not stay at their 200-day moving average very long. Okay, it's not just Apple, but this is what I call a key decision area. Something is going to happen here. I would love to tell you, I know we're going higher here, I know we're going lower here. I don't. But I will be watching this consolidation and looking for a break either way. The point is, we are at a location where a move is likely to happen. It is your job to identify that move and take advantage of it. Okay? All right. 2 stocks to watch. First, Meet Me. Reports, I believe, Monday or Tuesday. It doesn't matter. It's too close. Beautiful. Gorgeous pattern. Nice breakout. Nice stair step up. I mean, look at this. Down here in the 3s, up to the 6s, almost 7. Beautiful. But it has earnings. So does that mean it's going higher or lower? Yeah, I don't know. I don't know. Earnings can affect it. It's only a $6 stock. What's the risk? Okay. The point is, I don't know what the risk is. The risk could be severe, or it could be a little bit. It may just wiggle a little bit. Don't know. It's a complete coin flip, complete crapshoot. But it's a beautiful looking pattern. Okay, so let's see what happens after earnings. The second stock I want to look at, or I want to show you actually, I already looked at it, is V-Risk Analytics, I think is how it's pronounced, or Verisk. I don't know. Okay, whatever it is, the symbol is VRSK. Nice breakout, and the first consolidation after a breakout, usually very bullish, but this has earnings either Monday or Tuesday. Check with Yahoo earnings calendar. Doesn't matter to me because I know I got to wait till Wednesday at least to start looking at this, so I don't care if it's Monday or Tuesday, all right? But another beautiful, gorgeous pattern. Who knows if it's going to break higher or if it's going to fall down here, come back to where it broke out of, come back to the 50-day moving average. So we looked at some stocks in hindsight. Now we just looked at 2 stocks going forward, Meet and VRSK. 2 stocks to watch to see how they react to earnings. And again, thanks for watching this video, but keep in mind that if you are trading the day of earnings, and I'm not talking about intraday, hey, the stock's moving because it reports tonight, that's a different story. I'm talking about getting positioned and saying, oh, I know the stock's going to go up. Oh, the stock beat the last 15 times. Oh, the stock always goes down after earnings. Oh, the stock always goes up after earnings. Okay, again, if you think that's a trading plan, it's not. It's just flipping a coin. And the fact that it's gone up the last 8 times after earnings is like black coming on the roulette wheel 8 times in a row. Okay? It's just luck at this point. So be careful out there. If you have any questions, I'm in between websites right now, but I'm setting a new one up. You can contact me at winningedgetrader@gmail.com. And when I get the new website set up, we'll have a list, and I'll be able to send out these videos or send out my thoughts via email. Okay? Have a great trading week, and I will speak to you in the next video.